Welcome back to Talk Tickers, where we get straight to the tape.
And today, we've got a really interesting one.
We're breaking down Tetra Tech, ticker TTT, and this is their Q1 fiscal 2026 call.
Look, I have to say, when I saw the government shutdown headline hanging over this quarter...
I know, 6 weeks. For a company that relies on federal spending, I was honestly expecting a disaster.
You're ready for the eulogy?
Completely. But instead, we're looking at a beat and raise. So the big question for our deep dive today is, how?
Exactly. How do you pull that off? It's not just a survival story. It's an execution story. And the market, the market loved it.
Well, they did. Shares popped, what, over 3%? Up to 38.22?
And the volume was huge, 2.1 times the average. This wasn't a little nibble from investors. They were buying this story with both hands.
Okay, so before we get into the how, the Arctic, the M&A, all of it, let's ground this in the numbers. Give us the snapshot. What did the street see that got them so excited?
Well, the headline numbers were solid. Adjusted EPS came in at 35 cents, which beat the 31-cent consensus.
And GAAP was even better, right?
Yeah, 40 cents on a GAAP basis.
Right.
Revenue was a beat, too, around $1.21 billion. But if you stop there, you kind of miss the whole point.
It's the margins. It always is.
It's the margins. Adjusted EBITDA margin expanded 140 basis points year over year to 14.2%.
Wow. Okay, 140 basis points in this business that's monumental.
It's huge. It signals a fundamental shift in the quality of the business they're doing. It's not just more work, it's better work.
Right, because usually you see margins jump like that when a company shrinks. They fire their bad clients. But revenue went up.
No, they didn't shrink to glory. They grew into quality. It's all about this front-end strategy they have. They're doing less of the physical construction stuff.
Less pouring concrete.
Exactly. And a lot more of the high-end consulting, the design, the data analytics.
So they stopped being the bricklayer and started being the architect.
That's the perfect analogy. The architect gets paid for the idea, the plan. That's high-margin, scalable work. And that's where Tetra Tech is moving.
And the balance sheet can support all this.
Oh, it's pristine. Net debt is less than 1 times EBITDA. They hiked the dividend 12%, bought back $50 million in stock just this quarter. They are acting from a position of real financial strength.
All right, let's circle back to that paradox. The government shutdown. CEO Dan Batrack called it the longest in U.S. history. 6 weeks. That's half the quarter.
Right.
And yet, their government services group, the GSG, it grew by 5%. How is that even possible? You can't bill a client who isn't there to sign the check.
You can if you get the check signed before they walk out the door. It wasn't magic. It was aggressive planning around their IDIQ contracts.
Okay, break that down for us. What's an IDIQ?
Indefinite delivery, indefinite quantity. Think of it like this. You know a storm's coming, so you fill up your gas cans days before it hits.
So you're pre-funded.
Exactly. They worked with the DoD, the Army Corps of Engineers, and they got all these task orders funded and signed before October 1st. They filled the tank so the engine could keep running, even when the gas station was closed.
That'd be smart.
And there's another piece to it, the essential designation.
Right. National security doesn't stop for a shutdown.
A lot of their defense and critical infrastructure work it kept going. But there was also this great bit of salesmanship. They actually convinced the agencies that stopping and restarting projects is more expensive than just keeping them running.
Wait, that sounds like a good line, but did the government actually buy it?
I think they did, because it's true. If you demobilize a team of, say, nuclear engineers and then try to get them back 6 weeks later, you lose all your momentum. There's this huge restart tax. The clients agreed, and they kept the money flowing.
It's impressive. But is it a one-off? Management warned another shutdown could be coming.
And that is the risk for Q2, for sure. Batrack was very clear about that. But they've proven they have the playbook now. They're probably better positioned than anyone to handle it if it happens again.
Well, let's pivot to the quality of the business. You mentioned the margins. What about the backlog? It's sitting at, $3.95 billion? That number seems stable.
The dollar amount is stable, but the profit potential inside that number has skyrocketed. But the metric that really, really floored me was the days sales outstanding, the DSO.
It hit 51 days.
51 days. That's the best they've done in over 10 years.
And for anyone who thinks that's just boring accounting, explain why we should care.
Because it's a truth serum for client satisfaction. DSO is how long it takes to get paid. If a client is unhappy, they drag their feet. They dispute the bill.
And we're talking about government clients who are famous for paying slow even when they're happy.
Exactly. So to get paid in 51 days, it means the clients are thrilled. They're approving invoices almost instantly. It's a huge competitive advantage hidden in an accounting metric.
Let's zoom out a bit. Geographically, the U.S. has always been the story, but it feels like the Commonwealth countries are really starting to pop.
The international business is absolutely the secret growth engine right now. The UK and Ireland are on fire. We're talking double-digit growth.
And that's all about water, right? I saw AMP8 mentioned. What is that?
So AMP8 is Asset Management Period 8. In the UK, the water utilities are private, but they're heavily regulated. Every 5 years, the regulator forces them to spend billions to upgrade their infrastructure.
So it's not optional spending. It's mandated.
It's guaranteed revenue for the engineers designing all those upgrades. And then in Ireland, Irish Water is doubling their spend to almost 12 billion euros. Tetra Tech is just perfectly positioned to capture all that design work.
And what about Australia? That was a huge drag on earnings just a year ago.
It was a 15% headwind, bleeding revenue now. It's basically flat. They've stopped the bleeding. And interestingly, they're pivoting hard into defense work down there too.
Which brings us to the big leadership news. Dan Batrack, the CEO behind all this, is stepping down. He's moving to executive chairman. Roger Argus is the new CEO.
Right. And normally the market gets a little nervous with a change like that.
But the stock went up. So what gives?
This isn't a retirement. It's a redeployment. Batrack isn't going off to play golf. He's moving to executive chairman specifically to hunt for big M&A deals.
And the CFO has basically given him a blank check to do it.
A massive war chest. They can lever up to $2 billion almost overnight. And they said they could go up to 4 times leverage for a transformational deal.
Transformational is not code for small bolt-on acquisitions.
No. Batrack explicitly said he's going needle-moving, hunting. They spent the last year pruning the business, selling off low-margin stuff, and now the decks are clear for him to go find a massive deal to reshape the industry.
So Argus minds the shop, keeps the operations humming, while Batrack goes out to hunt the big game.
It's the best of both worlds. The market gets the operational consistency it loves and the blue sky growth potential it craves.
Speaking of blue sky, let's talk about the Arctic. This part of the Q&A, this really jumped out at me. We're talking about complex engineering challenges.
And it doesn't get more complex than the Arctic Circle. This is a fascinating convergence of geopolitics and climate change.
So what's happening up there?
Basically, the U.S. and Canada are rapidly militarizing the Arctic. There's a scramble for resources, for shipping lanes as the ice melts, but you can't just drive a tank up there.
There's no infrastructure.
None. No ports, no roads. And the ground itself, the permafrost, is literally melting. So you're building military bases on top of what's turning into a swamp.
That sounds like an engineering nightmare.
Which is Tetra Tech's dream. They're building ice roads. They're designing ports that can handle the shifting ground. They even mentioned that their geotechnical work shows up on the TV show Ice Road Truckers.
That's amazing.
Yeah.
And it's not just roads. They mentioned the shield.
The Golden Dome. It's the $151 billion missile defense plan. Now, let's be clear. Tetra Tech isn't building the missiles. They're not Raytheon. But before anyone can pour a single yard of concrete for a missile silo, someone has to do the environmental planning. Someone has to site the facility. That's the front end work.
So they're the gatekeepers. Nothing gets built until they sign off.
Exactly. It feels like the market is starting to see T-Tech not just as an engineering firm, but as a pure play on 2 giant themes, climate adaptation and global rearmament.
And they're doing it with those expanding margins. They raised guidance for the full year, too. They're expecting 9% top-line growth and another 80 basis points of margin expansion. The momentum is real.
It really is. It's a tough story to bet against right now.
Well, speaking of bets, I think it's time. We've arrived at our favorite part of the show.
It's time for the This Is Not Financial Advice segment.
And the disclaimer is key. This is an outrageous, plausible trade idea for entertainment purposes only. Please do not actually do this.
Okay, lay it on me. What have you got?
I'm calling this one the polar hedge.
The polar hedge.
I'm intrigued. So the thesis is this. The Arctic is the next big geopolitical hot zone. Conventional defense stocks are crowded. Everyone owns them.
Right. The valuation is stretched.
So the play. You go long T-Tech, specifically as a bet on Arctic infrastructure. You're betting that as the ice melts, nations will spend trillions to build on it, and Tetra Tech is the company selling the picks and shovels for that gold rush.
Okay, that's the long leg. What are we shorting against it?
This is the kicker. You pair the long T-Tech position by shorting a basket of commercial real estate developers who have massive exposure to coastal flooding in the southern hemisphere.
Oh, that is dark.
It's dark, but it's the perfect hedge. T-Tech gets paid to build the defenses against the very same climate change that is literally sinking the assets of the companies on your short side.
You're long the fixers and short the victims. It's the world is melting, but we've got engineers trade. I mean, it's cynical, but based on the call, it actually tracks.
It tracks. But again, for the love of everything, do not do this.
Please don't. Stick to your index funds.
So let's wrap this up. Give us the final recap.
Look, Tetra Tech delivered a masterclass. They navigated the shutdown, they beat on EPS, beat on revenue, and they raised guidance. Their margins are flying because they're shifting from muscle to brain power.
And now, their deal-making former CEO has a blank check to go buy the next phase of growth.
The shutdown paradox was really a shutdown opportunity, and as the world gets hotter and more dangerous, it seems like Tetra Tech has a very long runway of work ahead of it.
It's going to be a fascinating 12 months for them. We'll be watching. Thanks for joining us for this deep dive. Keep your eyes on the ticker.
Thanks for listening.